It's me Pavitran here. We will just do. I'll just teach you, or I'll just show you how I will do a top-down analysis. From monthly, we will go. Okay, I'll just start. This month that started April, and this candle will represent. Will end still 26 days and 5 hours left for this candle to get close. Previous candle was some started on March 2. Okay, so how to do a top down analysis? I just taken a monthly time frame. Previous month in the March, the huge selling pressure came from $50 levels, nearly $50 levels. High was 46.64, that was a high, and low was nearly 20, nearly a $28 sell-off that came. What can we expect in a month of April? According to candlesticks pattern, April month should mm, be in a selling side. Now according to this candle, we can take this as an retracement. 50% of the March month, maybe around $14 levels. No, from 34, it can able to reverse from $34 levels to $35 levels. From after hitting 34, it can reverse, or even after hitting somewhere near to 36 or 38, it can come again to 30 or even 20 is possible. A good short entry will be when the 2nd of March candle, the low has to break, that is 19.25. If the low will get broken, then we can short with somewhere around 50% or 60% of the candle high. I'm saying about the positional traders who used to trade on a monthly basis. They will just log into the system, place an order, just they will leave it for a month. It can either be running in profit or in loss. They will come and again take an entry. I'm just explaining about how monthly traders do. On monthly we are still bearish. I'll just change it to weekly time frame. On weekly it had turned to bullish. I will just give you an update on how and why. Okay. How and why you should have taken entry, and how the market is will indicate in advance. Okay, from 20th January, the low of 20th January get broken by 27th January candle. From that week low, from 27th January to somewhere to February 2. During that 5 trading days, the low of 20th January somewhere near to 53.82 gets broken. If the low gets broken, then we can assume the trend is gonna resume or still be in bearish. So simultaneously we have to check for the next candle too. After the close of this week, the next week opens it, when the low of previous week, that is 27th January, gets broken, we can assume that yes, still it is in bearish zone. And you can check on 10th February, the low of 3rd February has not been broken. That indicates that the market is trying to change. I'm not saying it changed, I'm saying it is trying to change into buying mode. Luckily it succeeded and it broke the 3rd February high. If it broke the 3rd February high, that clearly indicates that market had turned into buy. You can see the next week. Next week also gave another confirmation that it broke the previous week high, though bullishness continues. Now on 24th February, that is opening candle, it broke the low of 17th February candle. It broke the low. That indicate clearly that if low gets broken, then the trend starts to resume in whichever side that has broken. If the low has broken, then up a high of 17th candle, the trend would have been, it would have gone somewhere around maybe 60 or 70, but instead it broke the low of 17th February candle, so the trend still remains. We can easily assume that the fall had came from 60, it had came all the way. We can consider this as a fall, a little pullback, and then fall. You can even consider that. I'm saying that market will indicate to you whether it is gonna, where the sellers are gonna come or where the buyers gonna kick in after 24th. From 24 to 20, maybe somewhere around March 1, that candle got closed on next week. See, after this big red candle week, if the low has broken again, the trend is resuming. And you can even check whenever the low of the candle or high of the candle, the trend will either resume or if the trend will change. See, this low has got broken by opening of the ninth candle itself. The trend continued. We'll check for the next week too. See here, it broke the previous week low, that is 9th of March. That week low somewhere around 27.31. That low has been broken and market made a fall. If you can see when the buyers are gonna kick in on a weekly candle, it clearly showed of 23rd March buyers are gonna kick in. How they are, how the main reason is that the low hasn't been breached, the previous week low hasn't been breached. It is trying to act as an inside bar. If it is trying to act as an inside bar, one thing is clear, that sellers are not dominant over here. Buyers are gonna start to come, but we don't know for sure that buyers gonna come. There is a chance, maybe 50% chance, there is an 80% chance buyers gonna come, but sellers are losing their bearishness. Slowly buyers are going to kick in. See, on the next week it came down heavily. After that, it broke both previous week and the week before that it broke, but it can't able to sustain there, and suddenly it reversed the position and broke the previous week high. If the previous week high, the previous week high was somewhere around 25.20, if the high of the previous week 23rd of March gets broken, that clearly indicates us buyers have kicked in. Now what we can expect of 6th of April. On 6th of April, on Saturday and Sunday, many news might have triggered. We don't know, and we can't able to analyze each and every news. They may be positive, they may be negative, we don't know that. We have to wait for opening of the candle on Monday. On Monday opening candle, we will see a huge reaction, whether it's positive or negative. We will come to know how the investor in the crude oil are thinking. If there is a positive news on Saturday or Sunday, that will reflect on opening candle. If there is a negative news, it will also reflect on a opening candle. Then we can decide how to proceed further. On day, okay, if you can see the similarly, on 1st of April, it formed a little green candle. On 2nd of April, it broke the high of 1st April candle, and it then rallied. So you can see a slight change in momentum. You can see the candle size growing. You can see the volume compared to some volume was somewhere near to okay 580. Okay, the next day volume was 941, and the next day was 1.23 million. Oh, well, volume also gets increasing. The size of the candle is also getting increased. That clearly represents that momentum is on the buyer side till now, till end of the Friday. I'm not saying the coming weeks or coming days gonna come. How the market's gonna behave on 6, the same explanation I'm going to give you what I just did for weekly candle. Let's wait for the opening. You don't know what had happened on Saturday or Sunday. Maybe Trump might have posted some news related to Corona, or some news related to Saudi Arabia and Russia and OPEC talks. That might have triggered the reaction, but we don't know exactly what is that. So we have to wait for that. And on opening of the 6th, opening candle of the 6th on Monday, it will clearly show what had happened, what is the sentiment people and investors have been thinking, are waiting to get, waiting for a reaction. If a positive news is approached, the investor will be heavily buying crude oils. That will reflect in opening candle. You can see a huge surge of rally represented by green candle. Huge rally will happen. If some negative news, then a huge red candle is possible. If there is a mixed feeling, then they will leave it to the retailers. It will go for a buy, it will go for a sell. The same thing happens. There will be some kind of pattern which we can able to utilize. On 4-hour time frame, it's still a buy, but again opening candle is, we have to wait for opening candle. On 1-hour time frame, yeah, it is somewhat trying to, the volume is getting decreased. You can see 23:30, 3rd of April 23:30, the volume was somewhere near to 98k. And see the next volume is getting dropped to 64k. And see the next one 19k. If volume keeps on dropping, if you find rejection at higher levels, we can short it there by keeping high of this level, because volume, the higher highs are not sustaining, volume is not being supported. That means the buyer side strengthening, the bullishness is not very much as expected. They are trying to show some weakness. That weakness is represented in the volume and in price and in candlesticks. So this is somewhat an indication that buyers are going to give up, or you can even say the sellers are trying to kick in the market. This is the end of the day analysis. I'm not saying this will reflect in opening candle. On what opening candle, anything can happen, because it's news based, sentiment based, many other factors are there. After the news, after the triggering, after the opening candle, then the regular sentiment will kick in half an hour time frame also same. Okay, this is how you should do top down approach, from monthly to weekly, weekly to daily, daily to 4 hours, 4 hours to 1 hour, 1 hour to 30 minutes, 30 minutes to 15 minutes, 15 minutes to 5 minutes. 15 minutes and 5 minutes, I don't think that will give me an edge, because this is, I just want to know how the market is right now. On monthly it's bearish, on weekly it is trying to show bullishness, on daily it's showing bullishness. But once 6th of April candle gets formed in daily, then we will get a clear view on whether the bullishness is going to sustain or the bearishness is going to get overtaken. So till then we can't able to decide. Only thing I can able to decide is that on a monthly basis it's pure bearishness. On weekly basis, if the high of the previous week, say 28.80, the close above 29, close or cross above $29, will surely take it to somewhere around 2 weeks before high was 33 34 is on the cards. If close below, if sorry, close above 29. I can't able to say close, I can say cross. Okay, cross above $29 will take it to $34. Yeah, that's possible. On daily time frame I can't able to comment. On weekly I can able to comment. On weekly and monthly, this is kind of a confusing. How we are, you are saying on monthly it's bearishness, on weekly it's bullishness. Don't worry, on monthly time frame it's bearish. If you check for a monthly it's bearish, but we have to just have to keep a view of that. That's it. That is not going to help us. What is going to help us? If you are bearish on monthly, you should also keep stop loss according to the monthly candle. See, the stop loss should be around high of this previous month high, or nearly 80% or 70% to the previous month. That comes somewhere around $40. Right now it's trading around $28. If you want to take personal entry, you can wait somewhere around $34 or $35 levels, and you can place stop loss of $40 or high of this previous month high. You can take a short position over there. That is for monthly traders who take trades based on monthly time frame. If you are a weekly time frame trader, you have to, how you should take a trade. You should take trade based on the week's high low candle for your stop loss, and you have to keep targets. You can have a view, the overall view of how the monthly time frame works, the daily time frame, that top to down approach. But with bearishness in a monthly time frame and bullishness in weekly time frame, you can't able to take trade in 30 minutes or an hourly time frame candle. That is to give an edge. Okay, how the market is behaving on a whole, on a weekly basis how it is behaving, on a monthly basis how the market is. If you are a 30 minutes trader, you should do a top down approach from day candle, 4 hour, 1 hour, 30 minutes. It will give you clear edge on how it's going to behave for the next day. For the next week, how it's going to behave, you have to do analysis of weekly candle analysis. For the next month, how it's going to behave. For the next 30 days, how the crude oil is going to behave, you have to do analysis on monthly time frame. I hope this may give you some clear idea about how top down approaches helps. Yeah, I also gave an explanation for weekly candle target too. Okay, on monthly I said, okay, I just forgot to mention the target of monthly will just be back. Yeah, okay. 34 seems to be a good entry for monthly shots with the stop loss. Good place to keep stop loss is high of this previous month low, but 90% or 80% somewhere around 40 seems okay for me. 40 to 42 range seems okay for me. What target you should expect? Since it's at the very bottom, the next target should be 10. I do know for sure it will go for a 10, but according to candlesticks it is representing it should go for a 10, but I'm not sure of it because buyers are starting to kick in. We should be careful about that. Okay, monthly I gave stop loss and target. On daily I just skip to that because of the opening. On weekly I get target. Okay, fine. Okay, this is how I used to do my top to top down approach. I hope this was helpful for you. If you have any doubts, just leave it in the comment. I will just answer to your questions. Thank you.